Yeah, so just before the line went off, we had finished explaining the right issue, and I invited you to express some thoughts as far as the advantages and disadvantages of this particular financing option is concerned. What are your thoughts? Yes, anybody? Okay, Juliet, your hand is up. Then Kofi. Yeah, so after Juliet, then yes.
My Lord, one advantage is that it creates an opportunity for existing shareholders to increase their shares.
Okay. All right. Good. Yes, Edward.
Yes, my Lord, good evening.
Good evening.
Yes, initially I typed my response in the chat though, but I can put it across. That is, it makes the company to even bond better with the subscribers because there's opportunity for the company to write and express and explain better to the subscriber. And by so doing, it creates more bonding and a better relationship with the subscribers. However, the disadvantage that I will say is that it's a bit time consuming because the company have to wait until response is given by the subscriber also in writing. So until that is done, the process have to wait till the letter comes or the response comes. That is what I have to share, sir.
Okay, thank you, Kuma. Yes, Kwabena Kumi. Kwabena Kumi, can I mute? Okay, I think Emmanuel Gobe. I think Kumi's line is a bit shaky. So let's take Emmanuel Gobe.
Okay, my Lord. I think my friend also made mention of my points, but what I want to do is to compare what we've gone through so far. Because when you look at the public offer of shares, we all know that it's open to the general public, allowing a company to raise large amount of capital from a broad investors base. And when we look at the private placement of shares, it's restricted to selected investors, such as institutional investors and venture capitalisms. And when we look at the right issue of share, it's limited to existing shareholders, giving them an opportunity to also purchase an additional shares. So I was looking back to how some companies have been able to also utilize the right issue of shares to also raise some funds for their company. And I've gone through and I realized that most of the banks use it more, especially EcoBank use it. And recently, there was this bank that used the right issue of share, Cowbank. Yes, that was around 2024. Yes, around March, I remember. It's aimed at raising some funds by offering some shares to some particular existing shareholders to also aim the bank to also raise some shares and also some funds. And my Lord, I want to ask a question on this. Why do the banks actually utilize the right issue of shares? Mostly the banks utilize it. Example, Agricultural Development Bank also utilized this in 2014. I've forgotten about the months though. So I wanted to ask, is there something that deals with regularization or anything? I wanted to also ask this question.
Right. I think the answer is contained in the various statements you have made and your colleagues that the right issue, as we have noted, it targets existing shareholders. So the bank, for example, let's suppose that the Bank of Ghana has said that their capital adequacy ratio or something is not good, or they need to get to a certain level of capital in order to be adjudged as having a healthy operating balance. But they don't want to open up. So if the existing shareholders are prepared to bring a bit more money to enable the bank to attain the level that it needs to be, it would rather do that than going out openly, as it were. So that could be one of the reasons for attraction of such financing option for the banks. And also, you can also have particular companies or banks, and they may want to control those who come in. So if it's necessary to augment the capital and the existing shareholders are able to bring more funds, why not? Yes, Tijani Ibrahim. Tijani Ibrahim.
Hello, my lord. Good evening, my lord.
Yes, proceed. Tijani, proceed. Unmute and proceed.
Okay. Thank you, my lord.
Yes.
Yeah, it also enhances employee retention in the company, in that it makes the employees feel part of the company and also enhances the credibility of the company as to the employees extending their good wishes of the company to outsiders to buy into the vision and mission of the company, as it were. I think it also helps increase the value of the company as in buy into the capital market. It helps increase the value of their assets as against the liability of the company, for which reasons it stands a better chance of increasing their existing capital valuation when it comes to the ability to withstand any challenges when it comes to the possibility of being wound up.
Right. All right. Thank
you, my lord.
Thank you. Good. Now we also have what we call capitalization issue. So capitalization issue, also known as a bonus issue, is where companies plow back profits instead of distributing it as dividend. Now, as we proceed to discuss the details of the law regarding shares, you will be told that the returns which a shareholder gets for having a share in the company largely include the dividends. The dividends, that is the proportion of the profits made available to the shareholder for the shares that he or she has in a particular company. So with respect to capitalization issue, instead of distributing profit made by way of dividends to shareholders, that will not be done. And in place of distributing dividends, existing shareholders, that is, shareholders who have been entitled to be given dividends, which are not being given out, will rather be issued more shares to be given more shares in proportion to the value of dividend that will have been paid. So if you look at the section 77 of Act 992, it's to the effect that in lieu of payment of dividends, shares representing the value of the dividends which will have been paid to the shareholders are to be given to the respective shareholders. So that is how it is. So as it were, you are being given more shares. However, no direct payment will be made to you. We are rather going to use your share of the profit, which ought to have been paid to you, as a payment for the shares which are being given to you. So that is capitalization issues or the bonus issue. Of course, shares issued are not freebies. They are not just giveaway or Christmas bonanza, so to speak, to shareholders. The reason being that payment is made. The only difference is that instead of direct payment by shareholders, payments is through set-off arrangement, as it were. What is a set-off? Set-off in the sense that profits have been made, and according to their rules on distribution of dividends, dividends being part of the profit made ought to have been distributed to the shareholders. So in a sense, that will have been the money the company owe the shareholders. However, where shares are given to shareholders, ordinarily they should be paid for, but shareholders are not going to pay, and they are rather going to use their money with the company with respect to the retained dividends or non-distributed dividend as a payment for the shares. So that is the point about capitalization issue, also known as bonus issue. What do you think are the respective advantages and disadvantages of using capitalization or bonus issue as a means of raising shares? Anybody? Nathaniel?
Yeah, thank you, sir. I'm just looking at it. I think it can be beneficial for shareholders who receive the additional shares. I think the company doesn't need to spend, which can particularly be helpful during the periods of low cash reserve. That's what I can say. Thank you, sir.
Thank you, Nathaniel. iPhone, what is your name?
Okay, my lord, I'm Ajekum.
Ajekum?
Yeah, my lord.
What's the full name?
Ajekum Job, J-O-B.
Okay, Ajekum Job. All right.
Yeah. In my bank, I think 2017, we did a similar practice. The capitalization that you are talking about, we did that. And that was as a result of BOJ directive that all rural banks shouldn't pay dividends. But we realized that we wanted to increase our capital base. So as a result of that, the profit that we made, we decided to allow all shareholders to reinvest. And by so doing, we can increase or expand our capital.
Right, thank you.
And we did that. So I
Right.
think it's a form of increasing the bank's capital. Yeah. Thank you.
Right, thank you, Ajekum. Yes,
Thank you, my lord.
Anita? Akuya Anita, yeah.
My lord, please, one advantage of the capitalization issue is that they retain their earnings. The company retain the earnings that they make because they do not give their monies, the shares to the shareholders, but rather they allow them to invest in the shares. So it increases the company's capital base than relying on other external sources of funding.
Okay, so I think you've heard enough about the advantage? Are there any downside, any demerits or disadvantages? Okay, I think yes. iPhone, your hand is up.
Yeah, my lord.
Yes.
I think there are instances where, looking at maybe the economic hardship, shareholders are so much interested in getting their funds. So when it happens, there are instances they get aggrieved, but I think that is the only disadvantage I can see.
All right. Seven Boafo.
My Lord, good evening and a happy new year to yourself.
Happy returns.
Okay, so I think that in instances where it happens that the company is a relatively younger company or maybe a startup, opting for capitalization could sometimes make the company seem a bit overconfident and arrogant as compared to the alternative of a rights issue. And if it's not applied really well, it can discourage people from patronizing the capitalization offer.
Right. Right. Just to add to what Mr. Boafo said, I'll come to Kumi and then Tamino very soon. The point is that for the ordinary investor, especially in our part of the world, in Ghana, where shareholders put their money in a company, they expect that they should be getting direct returns, that is in the form of dividends. So where for long-term dividends are not forthcoming, they begin to regret putting their money in the company and they are extremely hesitant to even acquire more shares, as it were. So let's take Kwabena and then Tamino. Kwabena, yeah.
Good evening, my lord.
Good evening.
I think capitalization issues also may include shareholders and
Kwabena, can you speak up? Can you put your mic close to your mouth? Yes.
Okay. What I was saying was that capitalization issues may create shareholder expectations for future dividends or returns, which can be challenging for the company to do.
Right. Right. Thank you. Tamino, Bawa, Dari.
Good evening, my lord.
Good evening.
One of my colleagues gave an example of where their bank used that option. And I think that to use that option, sometimes you may need some specific regulatory compliance. So that may make the whole process complex.
Right. Right. Thank you. Let's say the last two, then you move on. Treme William and now Dansua. So Treme William.
Good evening, my lord.
Good evening.
So, my lord, I think the existing ownership would also be affected once new shares are issued. It means that new owners are also coming on board, and therefore the ownership of existing shareholders would also be potentially impacted. So I think the ownership will be diluted in a way.
No, how will ownership be diluted? Because the point about bonus or capitalization issue is still targeting existing shareholders. The only difference is that more shares are going to be given to them in proportion, that is, to the extent of the amount of money which ought to have been paid to them as dividends, which is not going to be paid. So capitalization issue is for existing shareholders who are entitled to dividends, but which is not going to be paid out. William, are you with us? on that point?
Yes, I'm with you, my lord.
Very
But
well.
I think the amount that the original shareholders were going to receive initially is in a way will be impacted, although new ones will not be floated.
Right. All right. Thank you. Now, Densua, sorry.
Good evening, sir.
Good evening.
Okay. Please, I hope the disadvantage of capitalization gives room for regulatory scrutiny, where overcapitalization can attract regulatory scrutiny, particularly if the company is seen as being over-leveraged or engaging in aggressive accounting practices.
Okay. So that where the company, as a matter of fact, has enough capital, it should not try to shortchange the shareholder by trying to give more shares and all that. All right. Okay, that is very well noted. Thank you. We also have what we call the conversion issue, and this involves issuing shares in lieu of repaying existing debts. So that can be done where the company owes a particular creditor. Instead of paying the creditor, there could be an arrangement by which the company will give shares in lieu of repaying the existing debt. Now, this is different from capitalization issue. Capitalization issue is existing shareholders who are supposed to be giving dividends. They are not paid the dividends, and they are giving more shares in proportion to the amount of dividends they will have paid. But in the case of conversion issue, the company is owing debts as repayment arrangement. It gives shares as a way of repayment of the debts. And the debt here is not necessarily existing shareholders. So that is the point to know. We also have convertible debentures. Later on, when we are discussing debentures or loan capital, in terms of Section 88 of Companies Act 2019 Act 992, you will come to know that the company might have issued a debenture like a long-term loan or debt with the option or the requirement that the debenture or the debt instrument can be changed from being a debt to be paid by the company to become shares, so that instead of paying the debenture holder for the debenture, it will be converted into shares as it were. So that is also an example of a conversion issue. So what are some of the advantages and disadvantages of conversion issue as a financing option for the company? Yes. I think somebody. Please, when we are having a class, I want to see everybody's full name so that it will help me in my attendance. Okay. So iPhone, you can speak. Is your hand up? iPhone, something. Yes, anybody? Okay, Turner. Yes.
Okay, thank you, sir. I think from the explanation you've given, I'm looking at it that probably this can help to maybe reduce the debt obligation and probably improve the capital structure of the company. That's how I'm saying it. Thank you, sir.
Okay, thank you. Yes, any other? Yes, Emmanuel Brobe. Yes, Emmanuel Brobe.
My Lord, with the conversion issue, I did not understand it much. If you could probably maybe go through again, please kindly.
Yeah,
Because I was trying.
conversion issue, we made the point that it is where shares are issued in lieu of repaying existing debt. In other words, let's say the company owes, and then instead of paying the creditor, it is agreed that shares should be issued as a means of repayment. Ordinarily, as a general rule, where shares are issued, it's supposed to attract valuable consideration, meaning that some payments should be made. But where it is a conversion issue, already the company owes the person to be issued the shares. So no extra payment will be made, as it were. And a typical example of conversion issue is what they call convertible debentures. So a debenture is a long-term or is a debt or loan which the company owes. And there could be a term in it to the effect that at some point, the debenture holder may elect to have the debenture to be converted or to be changed from being a debt to become an equity, to become share. Yeah, so in that regard, the person to be given the shares would not have to make any payment because already the company owes that person. So that is the conversion issue we are talking about. Yes, Foster Kwame also. We should be finishing this and move on to our substantive discussion. Yes, Foster Kwame also. You can release your mic. And then Poyopo Richard also release your mic.
My Lord.
Yes.
Okay, so this is Boache Bompon Richard.
Boache
Bompon Richard.
Bompon Richard, all right.
My Lord, one advantage of conversion issue is that it helps in the preservation of cash flow. This in the sense that at least it helps companies that are suffering liquidity so that they can just conserve the cash that they have in order to service those debts. And another disadvantage is that it may not be attractive to all lenders. So that is my contribution, my Lord.
All right, thank you.
Hello, my Lord.
Yes, Foster Kwame also.
Lord, I had a similar contribution, especially the advantage. It means that the company will get enough capitalization to do extra investment elsewhere. And then monies that would have been used to service the debt will not be used, and it can also be reinvested in other ventures. And then, as you said, the disadvantage, if you are a company, you are not paying your debt and you convert them into shares, it will discourage other creditors or investors to get into your business. That's my contribution.
Thank you, Kwame. Yeah, now then, Sua.
My Lord, please, as my colleagues have said, per your explanation, it means the advantage side gives the company some kind of financial security. But then the disadvantage, to looking at the disadvantage, it means the lenders are forced against their will to acquire shares instead of getting the monies they've lended to the companies.
All right, thank you. And the last one. Elizabeth. Okay, Elizabeth hands it down. Okay, that's fine. Good. So let's jump to what factors will influence the company in deciding on a particular financing option to adopt. Well, this will include the time. It will depend upon like the timing. The timing here will mean is the funds needed desperately. If the funds is needed desperately and is needed within the shortest possible time, it will influence the particular type of financing option to go for. And also like the cost. For example, if you are using these intermediaries, are you prepared to part with part of the money to be raised as a way of a commission? And again, the amount required will also determine upon the type of financing option. The legal requirements will be satisfied. The various options have got the different requirements of law, as we'll be discussing pretty soon. And also general preference of directors. And this will include their risk appetite, because the various options have got the associated potential risk. So how much risk are the directors, who are the decision makers, as it were, are prepared to assume? Then motivation for control. Some of the financing options will have implication for governance structure, for decision making, or for managerial control, as it were. And all those things will influence the decision to use one option as against the other. Restrictions may also be imposed by agreements binding on the company. Some financing options would include some rigid requirements. If we look at, when we're discussing effect of registered constitution last semester, there is one of the consequences of constitution of the company when registers is that where there is a provision in it to the effect that some persons are supposed to appoint directors, then that will be binding, regardless of the fact that they may not even be members or shareholders. So typically, some financing arrangements would include guarantees being given to the lenders or the investors that they will be allowed to maybe nominate or select certain directors when it comes to constituting the board of directors. So you see some restriction being imposed on the company. The macroeconomic climate and the general market conditions will also determine which financing option the company should go for. And of course, the gearing ratio, that is the debt to equity ratio of a company. How much gearing ratio is a company targeting? Sometimes the gearing ratio, that is in terms like the ratio of the total indebtedness of the company to its total shareholder funds, the equity, may be set by maybe industry regulators. For example, maybe if you take like those in the banking industry, Bank of Ghana may have its own recommended gearing ratio, liquidity ratio, and so on and so forth. So these are some of the factors which may influence the issue of shares, as it were. Yeah, so we'll continue with, it's now 8:32. We're going to continue with the discussion of part F. We'll look at the law itself and discuss the details of the law relating to shares, but we have to draw the curtain down here, and then we continue our next class. Tomorrow being Wednesday, for example, I should be able to do 1 hour with you if you are available. So tomorrow being Wednesday, I will come online at 7 and do 1 hour company law with you. Okay.